can you continue it, and will the composition of your top 10 names continue to perform or outperform next year?
Good questions. The first thing I would say is, with our fund on the precipice of being up 40% as we get into the end of 2019, I can't tell you with much confidence that it's going to continue. Now, I don't make a fundamental call. I actually think the fundamental underpinnings for tech are not sterling, but they're okay. But man, a 40% return in a single year is not what I expect going into 2020. I would ask people, frankly, and just being honest, to be very cautious. As far as my mix of my holdings, I would tell you that I continue, and I expect to continue, to favor semiconductors and semiconductor capital equipment within the technology sector. I think that they're not necessarily cheap stocks, but we have the greatest momentum there, and that won't necessarily stop on a dime on December 31st. It'll continue.
Yeah, Paul, real quick, just kind of technical question from me here. I mean, I'm looking at a chart of the fund, and as you say, it's done very, very well. But you had a fairly precipitous fall sort of in mid-December. Was there a reason for that in particular?
Yeah, so I took over the fund at the beginning of November of 18. And of course, you step right into a single quarter bear market in the fourth quarter of 18. Had a nice move back upwards. Actually stumbled a bit in the spring of this year, but has really saved our year and gave us a lot of momentum going into 2020. Was the move that we put on going overweight semiconductors and semiconductors capital equipment after they got smacked in that spring time period.
Got it. Steve, give me your take. Do you agree with Paul that perhaps the semis are a place to continue to look in terms of at least them being an area of potential outperformance next year, such as Micron and AMAT?
No, I generally agree with Paul, though I am a little bit more cautious on the semiconductors. They've been the clear outperformer this year and really have anticipated the upturn that's supposedly coming much earlier than they have historically. You know, Micron continues to try to call the bottom, but we still have inventories that are relatively high. I think there's been some pull forward of demand that might become a little more obvious in the next 1 to 2 quarters. Longer term, it's a great place to be. It's very clear that if there's value in hardware, it's in the semiconductor companies, not in the traditional systems companies. His caution, I think, makes a lot of sense going into the new year. Paul and I worked together at Merrill Lynch in 2000. So we've seen the bubble, and while I don't think we're in a tech bubble per se, there are some extreme numbers out there. There's a lot of overbought stocks. Central banks are extremely easy, which at some point is going to come home to roost. So from a trading perspective, I would be a little bit cautious going into the new year. We tend to prefer software and services.
So shifting over to the FANG stocks, a number of these stocks have had quite a run. Netflix, perhaps less so, but Facebook really shrugging off all those regulatory concerns. You know, there have been calls to break up Amazon as well as Facebook. How much are you looking at regulatory risks, as a factor that could come into play for those FANG stocks in particular?
I mean, regulation's clearly top concern for investors. Looking at these names, it probably reduces their ability to do M&A, which takes away a bit of optionality. But I have to say, when you look at names like Google and Facebook, they look, pretty well valued. I mean, they're fairly cheap given their growth rates. And the thing that usually gets you as a leading tech company is disruption, new technologies that disrupt your position. We're talking about new technologies like AI, Internet of Things. I don't see those disrupting these companies. In fact, they're leaders. So I think the regulation is a bit of a cloud. It's going to take some time for that to play out, but it wouldn't scare those names out of my portfolio.
Hey, Paul, big story today about Huawei and the U.S. trying to warn the U.K. That the firm is a security risk to MI5 and MI6. Just one example of this this brewing sort of internet Cold War. I wonder how complicated you think that makes tech investing in 2020, and are we sort of overthinking the implications of that right now?
Well, specifically to Huawei, I continue to be worried, and I continue to think that the way the U.S. has discussed the threat or potential threat of Huawei is grossly exaggerated. You know, one of the things that I worry about is obviously the big theme and the big driver in tech over, I don't think it's necessarily a 2020 phenomenon, but going beyond that is the transition to 5G. And if we continue to have this brouhaha with the Chinese, believe it or not, they're going to come out on the other side with a 5G lead, and it could be unsurmountable. And so I really would love to see this cleared up because I think it is a very big deal and something to watch, particularly over the next couple of years.
You know, within your portfolio, when you talk about 5G, Paul, what would you say is sort of the purest way to play the growth of 5G, regardless of whether the Chinese have a lead on us or not? We all know it's here. It's going to only grow in importance. Is there a name or two that you think and look at for next year that's a good way to play it if you believe there is significant growth to come?
Excellent question. The way I look at it is, again, I don't think it's a 2020 phenomenon. I think it's a late 2020 into 2021 phenomenon. And I still would go with the semiconductor companies. Micron, and as far as DRAM and NAND flash. And in the semiconductor capital equipment side, my favorites are Applied Materials and Lam Research. I would focus on those rather than anything to do with the hardware and particularly the handset suppliers, because that's where I think you might see some disappointment.
Do you think we'll see any impact of 5G in terms of it reaching the consumer and all the ripple effects that could come next year, or will it really not come until 2021?
I think it's stacked into the second half of next year earliest. One of the things that the bulls are talking about as it pertains to technology and technology drivers is essentially assuming that 5G is here and 5G is a aggressive ramp starting January 1st. I don't see that. I think maybe it's an aggressive ramp starting January 1st of 2021, and so I think there could be some disappointment. So to answer your question directly, very late 2020 in size in 2021.
And Steve, finally, you know, at the end of each year, I feel like we look back and we say, well, or we look ahead, actually, and we say technology shares may be overvalued a bit, certainly some of the names within it. They've had such a great run over the last year. Next year's got to be a tough year. And then the year comes to an end and you look at your portfolio and what outperformed, it's always tech. Are we going to just find the same thing next year? Is it just sort of a rule that really you've got to overweight tech in general?
I think in the long term, that's probably right. Tech has given us a 17% annual return over the last 25 years. So betting against tech generally hasn't worked too well. So even though we're a bit cautious in terms of the near term, you know, if the market's up high single digit, which Chris Senek, the Wolfe equity strategist, is looking for, it should be a decent year for technology. Technology is only becoming more important. It's not just within technology, but it's affecting every other industry. I talk to friends in private equity, and one says when they buy a company, he goes to the CEO and says, whatever business you think you're in, you're a tech company. So it doesn't mean every tech company is going to do well, but trends like 5G, platform, and cloud still have some real legs.